Hey, Dave Knight here from 123daytrade.com. Thank you for watching. Thank you for being here, watching me in that bottom corner over there, right? All right, I saw last week's video. I'll make sure that the bar itself you can see when I was rewatching my best trade of the week video, or the best trading opportunity of the week video last week. I noticed that when I was talking about that one volume bar, I had my face covering it over. I'll move it over a little bit so that you can see it this week. So learn from your mistakes, learn from what's going on. All right, so the trade setup that we're going to be looking at today came from Friday's trading. That'll be May 15th, 2020. And it came, this is the way it's set up as far as volume goes in to the market. Let's see, what was the open? 2802. So this is what it looked like at the time before the volume bar kicks the market. So what we see is 1182, the blue bar volumes and against the red bar volumes coming across make it still a solid short signal coming into the trading if you find the right trade setup. Now I end up taking I think this trade here for about 10 ticks and get knocked out. But the better trade comes a little bit later after it reaches over R1. Now, if you were in my listening to what I said before, there was a reason why up here over R1 was a valid trade setup. Let me tell you, we see a volume bar, by the way, but we're going to get to an even better reason why this was a really good trade setup. And it comes down to knowing what's going on in your time frames as well. And in this case, the daily chart. So this is hourly, but we want to go back to the daily chart. So the daily chart, when we were looking at this market, 2901, I believe, at that level was the high of the market of that trading day on Friday. And prior to that, let's blow this up a little bit so you can see it a little bit better. All right. So coming into this session on this daily chart, the high of the market was around, let me get my screen draw tool out, was about 2901. So right about, it was just a little, maybe it was a little under the R1 at this point. This over here was the highest volume bar, and it was prior to all of this onslaught going down. And as the May contract showed, that even a negative number can print in crude oil. If you paid attention, you'd have found out that they were going to allow it to go below zero. And there was actually a really good report that came out. Take a look at Zero Hedge. If you're not familiar with that company, there's a really good article that came out and what happened with IB and all the millions of dollars that they lost and the traders lost. One trader himself on April 20th had $77,000 in his account on that day, on April 20th, and then he ends up down. And this is not a mistake here. He finishes at 9 million down because IB software didn't take into account that the market could go below zero. They did not follow the CME guidelines and the Globex guidelines of making sure your software will show the negative numbers. So people were buying, and like this one gentleman was buying, he thought he was buying the deal of a lifetime at buying crude oil at a penny per contract, and his risk on each contract was $30. So he had to put up a margin of $30 is what he thought, and he was buying like 212 contracts at a pop. And he ends up, well, I don't know how it's going to end up for him, but when the smoke cleared and whatnot, he found out that he had a $9 million loss. So there's a little side bit of what happened if we go down here. This is the July contract that had a low of, what, $6 and something? But if you go look at May went down to minus 37. All right. So I got a little sidetracked there, but that's not a bad thing. So we have this line coming across. What the hell is that? It's Fibonacci retracement. There were so many things that screamed that this would have been a good sell if it wanted to be. That you could have went back and pretty much backed your truck up to this mark as it crosses over, and it could have, know what you see it, what it did do, but this could have went up here to supply. Now this above here, we found out there was supply up here before. Now we since found out it might be just weak supply, but there was a reason why the market sold off outside of COVID and down and whatnot. I mean, you see it came back up a little bit right through here, but there was a reason why the market sold off to start with up here, because there's supply. There's an interest in the market above, in this case, the $29 handle. So once we got up here, the market actually, we'll see on the hourly chart, that it tried to make an attempt down, and it stopped, and then it went back up. So, but the trade signal itself was valid. Knowing where that signal is, knowing how to control and look at the markets from the hourly, from the daily to the hourly to the 15-minute to the 10-minute time frame, and then find a signal that solidifies your position so that you could trade this situation. This could have been a really, really good day to be a short side trader when it reached above this 29.01 in the session. So let's go and look at, by the way, on the CTS platform, when you're enlarging things, if you push the A right there, it'll put things back the way you had it. All right. So the hourly chart, if we go back and look at the hourly pressing down, this is the press. Let's go back here. Right here, I believe it's 3 a.m. No, it's right in this area is when the market pressed. It pressed from here and came up, and it pressed down. When it reached, it went from here, 29. So at 9 o'clock, it was here. Right at the end of the 9 o'clock hour, right as 10 starts, it was down here. So at this point in time, let's blow this up a little bit. And let's go down, and we'll look at this at the 10-minute time frame as well. So right here, the market moves up, gets up to around here, moves up, and then it sells off. And it comes down to here. And then it finds support, and then ends up going up. But right here, on this sell, there was a good opportunity, and the market wanted to turn over. And if there was interest to drive it down, the market could have done whatever. The market will do whatever the market wants to do on any given day. All you can do is try to get yourself away from being the truck. If a truck is coming, no, this is a terrible drawing, but if a truck is coming at you and this is you, do you want to be in front of that truck like that, or do you want to be on the back right here hanging on as that truck is moving, right? You want to be back here, right? You don't want to be in front of the truck, you want to be behind it. So hopefully that little stick figure drawing will help a little bit. So let's move on. All right, so once again, if you press the A, that will put the charts back the way they were. Now we're working our way top down, right? So we looked at the what we want to do right now is look at the same time frame in the 10-minute period of time that was in. Now you notice I have some trend lines on this chart that were helping me out, where I thought maybe the market would retrace back down. So at the same time frame, let's blow this up a little bit, was right in here. So this is where the market goes above the 29.11, I believe, was the high of that day in April. Get the screen draw tool out. But it was the first time that we went over the 20, let's call it, I think it was 29.11. That's just in the July contract. So I believe $29.11 on the crude oil market was that mark. So it was the first time that we crossed over it. So this was the 29.01 that it got to and then sold off. And this is prior to me being able to trade it. This was 3:50 in the morning, 4:50 my time. I'm not up right there, but I was up during this time. So I see this high being printed right here, and then I was able to catch pretty much this whole move going down through here. If I could have held on a little bit better on this minor retracement that comes off for a little bit, I would have been able to capture this whole move and move to step 2. But the rabbit side of the strategy is not designed to catch every single cent of the market. It's designed to get as much profit on any given trade, working with momentum on your side. The turtle side of the side is to catch the bigger, longer profits. Anyway, and long story short, in the 30K account, I don't trade the turtle. That's designed for basically, I don't know if there's a market design. Maybe the 150,000 or 100,000 account, adding a second contract at TopStepTrader would make sense, but you're still dealing with the 1,000 weekly loss, I believe. So there's still some things that you have to watch out for. Even though you have a bigger loss amount, you have a weekly loss amount that you have to follow as well. So there's some tricks to the trade that you have to beware. That's why I only believe, in my humble opinion, as I look at TopStepTrader, I think you can do any of the combines you want to, but what makes sense for me is the 30K account. And why? Because I know I'm only going to trade one contract at it, and I'm going to go against that $500 daily loss if I have to. Because I believe that I'm going to win more days than I'm going to lose, and more times than not, I won't get anywhere near that. All right, so another side bar. So once again, this was the down movement that we're looking at in the same time frame. I had a plan of attack, right? I knew I wanted to be short if we crested over 29.11. And in fact, we went just a little bit higher than 29.11. You could have had a standing order out there to wait for it to crest and then take it on down. So this was the actual movement of the market, and it comes down to the low, roughly down to here, which ends up being roughly I think it was a 2p down move. Maybe I actually ended up being, I think it was almost a 3p down move from the high up here, if I'm not mistaken, once again. But anyway, so now we're finally at the time frame that we're looking at, the tick chart, and how the market set up. Whoops, I did not want that to go there. Get you back. Move you over. Now we're finally looking at the trade itself and how it formed itself on the tick chart. Once again, this is what the markets look like. We knew we wanted a short. I wanted it to get over the 29.01, to get up over the 29.11 from once again that area that came across going back to the daily chart. This was the high prior that we were working against on April 3rd. So I knew what I wanted to do. I knew how I wanted to attack the market. I just was waiting for the right setup to come through to be able to take advantage of it. So it does come, and as I move forward the tick chart, you're going to actually see it. Right here coming in, let me move this over so you can see it. So this was the volume bar that comes across. Now, on the charts itself, what you would do, basically, is move everything down, and at this point in time at 9:12, but I wasn't able to do it at the time because this happens very quick. But what in effect you're doing to your charts is this. And what we see is that we have a $1,255 not dollar, but a difference between blue against red, putting that if it wants to sell off at this point, this is a great place for the market to be able to sell off. This is what it looks like. Here's your blues of the markets. Here's your reds, and the blues are outweighing the reds by 1,255. If you look at the top three reds against blues in the volume, this is a great setup here. The setup actually physically comes in on a 1, 2, 3 setup. So here's your 1 point, here's your 2, here comes your 3, and your setup comes right in this area. And it ends up being, this was the one part of the move. I get taken out on this move coming up through here. So I ended up getting, I believe, 35 ticks on the trade itself. So it was a nice setup. Everything worked out just fine for me. But I could have, as I release this chart and move it over, if I would have been able to handle this little bit, in other words, if this move right here didn't go as deep, because I was a little above this level here, if it wouldn't have gone as deep, then I would have been able to capture this whole move itself. So it was a nice setup as well. I don't exactly remember my exact entry point, but it was pretty close moving up through here. And then this would have been a good entry point for something secondary coming in to the market. So it was a nice setup coming through, going down through here. And this right here, this mark right there, would have, the reason that was on there, that would have won my step one in the STP, in the TST step one in the combine. And it did run this mark, it just took me out right around here, I believe. Because I think this is where I got knocked out, right in this area. I believe I was able to withstand pretty much all this move, but I messed up. I know I messed that part of the move itself. But the trade itself was a beautiful setup. The turtle side of the trade exits right around here, coming back and up and through as you're looking at your highway as it makes a new low, and you're getting out on the gold line in this case, because the blue line is flatlining right there. So you're using your gold line to exit the trade. This in itself was a nice, it was the best setup that I saw this week, and it was the one setup that I was able to profit on and move myself closer to moving to the next stage at TopStepTrader at step 2. All right, this is Dave Knight here from 123daytrade.com. I appreciate you watching this video. We'll put it up here on YouTube so you can watch it as well. Bye for now.